Hi, today we'd like to talk to you a little bit about what's going on with all of this crazy GameStop, Reddit, what have you. In case you're wondering, we would like to break it down a little bit for you. To start, we're going to illustrate what shorting a stock looks like.
Right, because I think a lot of people don't understand how it works. So I'm going to give you the stock first. There's the stock certificate.
But this is going to be at my stockbroker's.
That's right.
Office.
And then this is your money for your wallet.
Thank you.
And then I'm actually going to be the market.
Okay.
So the first step is you're going to actually borrow the shares or the stock from your broker, and then you're going to sell it to me, the market.
And this actually belongs to one of my broker's other clients.
Correct. Thank you for bringing that up.
So I'm just borrowing it.
You're borrowing it.
And then I'm going to sell it.
You're selling it to me.
Okay.
Give me your stock, and I'm going to pay you for it.
Yes.
You get all that money. Now, the reason you want to sell this stock and borrow it is you're hoping that the price goes down. Mm-hmm. So in this illustration, we'll say the price went down, and you can buy it now for $20.
Okay.
So I'm going to sell
you
it back.
Thank you. And then I'm going to return this to my broker.
Right. And you get to keep the rest of the money as your profit.
Yay.
And that's what selling short is. And this is really mainly done by hedge funds and very experienced investors. So I'm going to give me the money back. Now we're going to show it the other way what happens. So you're going to borrow this stock again.
Okay.
And you're going to sell it again. But this time the price went up.
Because of a short squeeze?
Well, we'll talk about the short squeeze later,
okay.
But the price of the stock goes up.
Uh-oh.
So now you got to buy it back to return it to the brokerage firm you borrowed it from. So that's not enough money.
I only have $100.
It's $140 now.
Ugh. So now I have to go into my wallet and get the 40.
There you go.
So I just lost $40 and I walk away with no stock because I have to return this.
Right. So that's and we'll go through later on what led to this. But anyway, that's pretty much what a short squeeze is all about. So give me my money. I don't watch it every day. So anyway, so now we want to talk about how this happened.
Yeah, so what exactly happened, Doug? Walk us through it.
Well, so the beginning is, first of all, day traders and speculators have for a long time been using something like Reddit, and in this case it's an individual, not social media, what did you call it? It's almost like a blog.
No. Message board.
A message board, thank you. They were using Wall Street Bets, which is a message board. Anyone can go in and anyone can sign in. And basically they use there's a bunch of these message boards out there that day traders and speculators use. And then what they do is they kind of share ideas. Well, in this time, what basically happened is someone in this message board got the idea of buying stocks that have large positions of shorts against them, and this is published. You can actually find it. Dorsey Wright actually publishes a list of it also, so you can find it. So that's basically how it started. Mm-hmm. Then what happened next is they started buying the individual stocks that they saw that had large short positions, like GameStop and AMC theaters, because they were losing money and doing poorly. And then that led to the short squeeze, which you kind of saw earlier.
It definitely seemed like this sort of populist movement. After it initially got started, people got excited about jumping on board and sort of defending these companies that really didn't have a lot of inherent value.
Yeah, that's exactly right. So at the beginning, it was just speculators and day traders buying up the stock, trying to force this squeeze where the people who are short now have to buy back the stock, and that drives it up even more. But then you got the next group coming in that thought it was really, they're really putting it to Wall Street, which they really weren't, and that drove it up. So whenever you see a big upswing like that, and in this chart that we have from Dorsey Wright of GameStop, you'll see that it went up a huge amount, that column of X's. You always will see it followed by a huge column of O's going back down. And when clients were calling in about this, I was telling them you don't want to be anywhere near this stock right now because it's going to be taking a big hit like it did. So
it's been a crazy and a different thing in investing that I don't think we've ever seen before. It's really the first time that social media has been such an influence in investing.
That's the big change in it, is that social media became a big part of this whole drive up of the stock. But the regulators and the Congress, they're trying to say, well, you need to police this up, and I think that's going to be really hard to do because there's tons of these message boards that day traders are on all the time. There isn't just Reddit.
Right.
Yeah.
So that's a little bit about what's going on with the whole GameStop situation. As always, if you have questions, please give us a call.